Hello everyone, this is Rahul here as the Chief Executive Officer of Treasury Consulting LLP, and today we would be covering a topic which is the world of foreign exchange swaps. I hope you've been through our earlier videos which is the world of foreign exchange options. So a lot of time during discussions in conferences, seminar, training sessions, a lot of times things are coming up about what is swap and what are the different type of swaps we have. But unfortunately, we are getting the orthodox answer. Like even if today you look at the books, you will get to know that there are only one kind of swap in which somebody will pay fix, somebody will receive fix, and the net would be settled, right? In a technical perspective and from a practical perspective, such kind of swaps do not exist. I don't understand that why still the books are still continue to prove that one side you would have a fixed which is coming, one side you have floating which is coming, and the net would be settled. Practically speaking, technically speaking, interbank speaking, corporate speaking, broker wise speaking, such kind of swaps do not exist. So this is a complete myth. This is an actual world of a swap. Although the size of the board is very limited, if we would have a big size of the board, we would have elaborate more about the swap. But in the next 5, 7 or 8 minutes, we will try and elaborate the swap in a little way. Before moving further, we should understand a little difference between swap and forward contracts. Forward is a one-side transaction. It just happened, at a period of a time, a party means a corporate will either pay or receive. The counterparty, which is bank, will do the opposite. It could be interbank, like one bank between another bank. But swap is a long-term transaction. We need to understand, and swap is always a longer tenor transaction. Like India is a very shallow market as far as the swaps is concerned. Take an example. If you have Reuters and you will just type the RIC stands for Reuters Identification Code, and you type INR IRS, you will get to know that the maximum tenor India is offering is 10 years. I'm not saying that the data after 10 years do not exist, it do, but on Reuters it is not there. So you need to reach to bank for that, and of course if you go to 5 banks, they would have different data. On the other hand, if you go to the OIS market, overnight index swap market, which we are mentioning here, OIS, right, you will see only the 15 years data. But if you compare the American IRS, USD IRS and USD OIS, they will show you the 50-year data. If you go to the Euro OIS and Euro IRS, they will show you the 50-year-old data. So G7 currencies are very deep in nature, in the sense like they have a very deep financial markets, and then ideally it should be, because and else they will never be a G7, right? This is a small world of swap which we have posted. We are not here to technically discuss what swap is all about. At the end we will introduce you to a new kind of swap, right? Now what is that? Basically the swaps are categorized into 4 categories. One is foreign currency swaps. I should write FC. One is LIBOR swaps. One is Quanto swaps. One is local currency swaps. These are the 4 broader categories of the swap market. Foreign currency swaps will further segregate into 2 parts. One is the dollar swaps, one is the reverse dollar swap. Somebody might ask a question from me, or must be thinking that why I am referring to dollar. Why? Because majority of the swaps are quoted in dollar. During our training programs, somebody asked a question that what is USD IRS? All the interest rate swaps, the second hedging component of the interest rate swap, which is coupon only swap, is done via USD IRS. Henceforth, globally swaps are divided into 2 parts. One is dollar swaps, another is the reverse dollar swaps. Dollar swaps and reverse dollar swaps are further categorized into 2 parts. One is the fixed rate swap. In a swap there are 2 players. I think majority of the people do not know that. Like take a simple example. Let me explain this using a forward contract. Suppose take 2 companies, Infosys and Reliance. Infosys is selling dollar, and because they are an exporter, Reliance is buying dollar because they are predominantly an importer. Once Infosys is selling dollars, what does that mean? That Infosys is actually on the sell side. Who is on the buy side? The bank. Once Reliance is buying dollars, who is on the buying side? Reliance. Who is on the sell side? Bank. Similarly, swaps also would have a buy side and a sell side. How it is that the fixed rate pair would always be a long side. fixed rate pair would always be on the long side, and floating rate pair would always be on the short side. That is, it's not bid and ask, this is long and short. So example, you are entering into a swap wherein you are a fixed rate pair, it means you are on the long side of the curve. If you are a floating rate pair, you are on the short side of the curve. So both dollar and reverse dollar swaps are further categorized into two parts. One is the fixed rate swaps and one is the floating rate swap. Example, you and both are further categorized into two parts that I hope you people understand: assets and liabilities. Before moving further, let me explain again. There is a biggest misconception as far as India is concerned, that swaps are only be used to hedge liabilities. No, swaps can also be used to hedge assets also. You go to Reuters and you go to Bloomberg and you check anyone, USD IRS, Euro IRS, GBP IRS, AUD IRS, JPY IRS, New Zealand IRS, Canadian dollar IRS, any IRS you check, any OIS you check, you will always get bid and ask. Bid means corporate asset and bank liability, while ask means corporate liability and bank asset. As simple as that. Now in this case also, swaps are always assets and liabilities both. So you have fixed rate swaps wherein it means you are paying fixed, receiving floating. You are floating rate swaps, it means you are paying floating, receiving fixed. So here I am writing, you are paying fixed, receiving float. Here it would be reverse. You would be pay float and you would be receiving fixed. Similarly, reverse dollar swaps would be divided into two parts. One is the long position paying fixed, one is the short position. Reverse dollar swaps means, suppose you are taking from an Indian perspective, you are taking an INR liability into consideration. Suppose you are in India and you are taking INR liability into consideration. Once you take INR liability into consideration, this is reverse dollar swaps. Now here we have further two options: conversion of fixed rate to floating rate. Here conversion of floating to fixed. Misnomberly, in a training sessions, in a presentations, people will mention that conversion of fixed liability to floating liability or conversion of floating liability to a fixed liability. But they don't understand that what actually it is. Actually it is here. So you are foreign currency swap, which are divided into two parts: dollar swaps and reverse dollar swaps, which are further divided into two parts: fixed and float. Fixed means the long side, float means the short side. Fixed means that paying fixed, receive floating. Here it means that pay float and receive fixed. It also means that if you want, you can convert the fixed rate liability into float rate liability. Here if you want, you can convert a float rate liability into fixed rate liability. And the same case gone here. Then we have LIBOR swaps, London Interbank Offered Rate. In London Interbank Offered Rate, there are 5 currencies: GBP, Euro, Japanese yen, CHF, and not to mention the American dollars. The biggest mistake which we people always do, and especially in the books and during the training session also, there's a very often mistake you will get to know that. What people generally do, people write like that: LIBOR plus 125 basis point. Technically this is incorrect, because LIBOR is quoting in 5 currencies. Which LIBOR you are talking about? Are you talking about dollar LIBOR? Are you talking GBP LIBOR? Are you talking Euro LIBOR? Are you talking CHF LIBOR? Are you talking Japanese yen LIBOR? We have 5 LIBORs, 5 currencies. Currently LIBOR is quoting in 5 currencies and 6 denominations, which is total 30 compositions. And there was the time when LIBOR was quoted in 10 currencies and 50 denominations, to total 150 compositions. So it is just 1/5, 20% of that. 80% they have phased out. Australian dollar gone, New Zealand dollar gone, Danish krona gone, and a lot of currencies went out. So one is a LIBOR swap. In a LIBOR swap, we have one more kind of swap which is known as LIBOR fiat swaps. LIBOR fiat swap is when the QSD is equals to 0. QSD stands for quality spread differential. When the quality spread differential is 0, then we have LIBOR fiat swap. Now what is quality spread differential? We are not discussing that. We will discuss only in our training programs. Then you have a conto swap. What is conto swap? The swaps are taken in dollar but settling in GBP. Currency is different. What is reverse conto swap? Swaps are taken in a non-functional currency but settling in functional currency. We are planning a video on a reverse conto swap, wherein we would take the live data from Bloomberg and we will put the data and we will try and explain you what reverse conto swap stands at, but this will take some time. Then we have the fourth category and the last category, last but not the least, because the swap world is pretty big and it's growing. One is the local currency swap. Let's take an example. All those people, those from India, US, London, Europe, Luxembourg are watching. I wanted to ask a very simple question, and especially for the people in India. Suppose you have 150 crore rupees of term deposit in your books, 150 crore. And assuming that it's a surplus cash, you don't need that cash. So there are, although economy is going down, but still we have many surplus companies in India. And assuming you would need to, assuming there is no need of that cash. So what exactly is the situation is that you don't need that, and currently it is fetching 6.5%, assuming. And the market went to 7.5%, and then subsequently market went to 8%. How can you increase your income from 6.5% subsequently to 7.5% and then to 8%? That can only be done using OIS, which is overnight index swap. If somebody will ask me a question in any interview or in any trading session, what are the two deepest swap markets of this globe? My answer would always be IRS, interest rate swaps, and OIS, which is overnight index swap. In India, both IRS and OIS are shallow, but across the globe they are all deep. So the two deepest market across the globe is IRS and OIS. Then we have G-Sec swaps. In India, the G-Sec swap is INBMK, Indian Benchmark Index, which is INBMK. Then we have CMT swaps. CMT stands for Constant Treasury Maturity Swaps. CMT swaps. Then you have, which is further all three divided into two parts, fixed or a floating swap. We have one more category of swap which is known as CMT spread swaps. Wherein what exactly is the composition? You have CMT plus a spread. Whatever we are teaching here is a part of our course. So if you wanted to understand everything in detail, you can participate in our course. One type of swap which is coming up nowadays, which are getting very familiarized in US but still India have not talked about, which is triple S swaps. Spread sensitive swaps. SSS. Spread sensitive swaps. What is spread sensitive swaps? Let's take an example. Today I am raising money. I am Reliance Industries Limited and I am raising money, and suppose the rate at which I am raising money is LIBOR plus 125 basis point. As a human mentality, our mind will always focus, our mind will always come here to hedge the L. And how we'll hedge? We know that we have three parts, which is principal only swap, we have coupon only swap, we have, if we add total, we have cross currency interest rate swap. Did we ever thought that this 120 basis point, which is also known as quality spread differential, this continues to move? Today the quality spread differential for Reliance is 125, next year it could be 135, next to next year it could be 95, and after that it could be 100, it could change. This 125 can also be hedged. But human mentality, we will always hedge this L. The hedging of this 125 basis point every year for the next 10 years, assuming Reliance is taking swaps for 10 years, is known as spread sensitive swaps. which we are covering in our course, and that is very technical swap. This cannot be done without options, and we have to take, just to give you a hint, we have to take CSO into consideration, credit spread option, sometimes put, sometimes call, sometimes ranged. This is how it is. This is a small world of swap. All those people, those who have watched this video clearly, completely, please go through the books without quoting the name of the authors and just check how many of these swaps they are offering. If the time permits and if everything went well, my next book, if the time permits, because time is very limited, if the time permits and we would be able to publish our next book on time within this year, we would surely be covering most of them, but in short, not in detail. Few would be in detail, few would be in short. Nobody thought that we could hedge that. You open any book and you will get to know that people don't know that how to hedge that. We always focus upon L and so many things. This is the shortest world of the swap, which is not the part of the book. In fact, majority of the books don't talk about OIS, which is overnight index swap. I will wind up my discussion just with a one line. All the people, those who are in India, are having two cases. Case number one, an Indian rupee liability at 8%, case number two, and in an Indian rupee asset at 7%. Assuming the market is going up or the market is going down, just let me know how you can hedge that without winding up that in the books, and that can only be possible using OIS. We would like to thank you very much for your time, and before winding up this video, I would appraise you something about Treasury Consulting LLP. We just completed 1 year of operation, and that with the blessings of Lord went very well. Our fixed income platform has already started, and hopefully by end of October we would be able to publish fixed income platform across the globe. And now our endeavor is very clear that by 3rd January 18, when the MiFID II will come up in this globe, which is one of the backbone of the RegTech, right? We would come up with lot of videos and lot of consulting services, and we will make sure that before 3rd of January 2018, Treasury Consulting would be very limited companies in Asia, those who have the complete cycle of the treasury function. So one side we would covering the functional part, another side we would be covering the technological part, which is Murex, Calypso and all, which we already offering and which we already started. Third side we would be covering the RegTech, which is regulatory technologies like MiFID, MiFIR, AMIR, ESMA, your CRD4, Basel 3 and all. Hopefully, if everything go well and the efforts would come in the right direction, then 3rd January 2018 we would able to cover all the 3 cycles of a treasury function, 3 phases of a treasury function, and we would be an integrated company who would offer everything in treasury, whether it is a functional or it's a technical, which we are already offering, or it is a regulatory part, which is a RegTech. And our first phase of a fixed income platform, which is coming in October, would surely be touching Indian regulatory and foreign regulatory, that is for sure. We already said number of times that this is not the only thing which we are doing. So this fixed income platform won't be the end. This will divide it into 4 phases. But we cannot have the complete fixed income platform at one go. So what we would be doing, that the first phase we are launching in October and multiple phases we keep launching. So that, and the complete phasing would happen in December 2018, and once this would happen, that you would be able to see a very integrated fixed income platform which offers you everything, complete, functional, technological and regulatory. Thank you, and very well, just a formality. In case you would like to visit our website, this is www.treasuryconsulting.in. Our mobile is 9899242978. While my Skype ID is Rahul5327, my email is rahul.magan@treasuryconsulting.in. Our existing website is also subject to change, and hopefully by December we would be able to change that completely and able to bring a very wonderful site before you. Thank you and have a great time.